I basically downloaded a lot of the data from the Census Bureau, from the Bureau of Labor Statistics, from city data. City data is another good source there where you can find information. I brought all of that into my database and did all the calculation. And I published all that data and created an application on top of that.
Hello, you're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
Welcome back, everyone, to Ready, Set, Go Real Estate Investing Podcast. I'm your host, Mr. Brandon Elliott. Today, we're going to be coming to the realization that the market that we're in right now, anybody just getting started, interest rates are a little bit higher. There's still opportunities out there. At the end of the day, if you are hanging out with maybe $50,000 to $100,000 in capital to invest in, it's something that you may want to get started in single family rentals, right? There's opportunities within turnkey properties. And so today we have Eric coming in from Florida. They've done a enormous amount of rentals, turnkeys, and teaching so many others out there to really get started in turnkey rentals, what it could do for you and the longevity of things, and how to really set yourself up for success in certain markets like Ohio, Detroit, and so forth. So they have a flipping system where they are teaching other people how to do it as well, but really excited to talk more about the single family market opportunities and how you could actually capitalize if you want to get started right now as a real estate investor in single family investing. So, Eric, what is happening, my friend? How are we doing today?
Very good, very good. Thank you, Brandon. Thank you for having me.
Of course. So talk to us. Anybody out there that doesn't know who you are, where you're from, do you mind giving that 30,000 foot view to myself and the listeners?
Absolutely. So I started my first investment. This was kind of like my rich dad, poor dad moment. I bought my first 8-unit apartment building when I was 18 years old and still at university. I had met this mentor, this real estate investor, and then he showed me the ropes on how to invest in real estate. I bought this 8-unit apartment building with no money down because that's exactly the amount of money I had. And it was a lot of work to get these things. I had to analyze like 500 deals in order to find it, and then eventually I found something that worked. That was still cash flowing after the 100% refinancing. But it took a while back after that to find my footing, find more real estate. I was always going in cities and in markets that were like very cosmopolitan, big cities, and you can find deals there. So imagine like Toronto, San Francisco, LA. It's just impossible to find deals there. And I always felt like I was the small fish in a big pond with much bigger fish.
Eric,
somehow, right?
Let me ask, why do you feel like it's impossible? Because I'm in San Diego, and when I first got started, I was working my butt off for 2 years trying to figure it out in San Diego. But what I came to realize that I'm going against really savvy investors.
Oh, yeah.
And there's a lot. And so what other takeaways do you have from that makes it nearly impossible?
Yeah, so I looked at all kinds of different opportunities. So first of all, you can't find a deal. There's so much demand. There's so much, like you mentioned, there's so many savvy investors out there that you can't get a deal. You can't get something that is like below market. Forget about that. I went to a house, I had done all these, the thing that they do, like the yellow letter and stuff like that in the San Francisco Bay Area. And I had a couple of people that I went to their house, and then the house was like in shambles and all that kind of stuff. And they wanted to sell it quickly. I would have to put like $100,000 in renovations. And then they wanted to sell it to me at the after repair value. It's like, how am I going to make money? That doesn't make any sense. And to me, the thing that broke the camel's back is I was looking at this in San Francisco. I forget where it was, like an inner Sunset area. So there was a house with $800,000. Beautiful house on the outside. The structure was beautiful and all of that. And I went to visit it, and I knew that I could probably sell that house once it's fully renovated to like $2.2 million or something like that. So I said, wow, $800,000, 2.2, putting $400,000 or $500,000 in renovation though, because there was so much mold in there. There's a hole in the roof. There was windows missing. There was just like And the person that owned the house basically died on the property to top it all off. So everything was going for it.
Yeah.
But I went to visit it, and it was, and I knew that there was like 30 people that had requested the disclosure package from the realtor. And so I knew there was some competition against me for that not tear down, but that gut job kind of renovation project. And so I put my offer at $1.2 million. It was listed for $800,000. I put my offer at $1.2 million, no contingency.
Because you knew that there's a lot of other savvy investors that were going to be bidding it up, for sure.
I thought I would be getting it. I was assuming that I would make between $100,000 and $200,000. So no contingency, no fast closing. And then I had to say like all cash. I had like a hard money lender that was ready to go on the back end. So I said all cash and all that kind of stuff. And it's like, no contingency. You had to go for it. Luckily, I didn't get it, but somebody bought it for $1.4 million. And that there was no profit for me to do that. So that's when I knew that I was a small fish in here. The people that have a lot of money. They have like $4, $5, $10 million in a bank. And for them, they're just going to put it there. They don't have any financing costs. And then they're going to be able to, and they have some of them have a construction crew. Some of them have, all that. So they,
not going to quit.
You're going to make some money. It's still not going to make great returns, but it's going to be better than what I would be making. And so that's when I was just like, oh, no, forget about it. This is not the right market for me. And then we kind of went back to the drawing board, family and I, and we said, okay, well, let's focus on passive income, single family. We can't do that. Also, we looked at that in the San Francisco Bay Area. You just couldn't do that either. They don't cash flow unless you put like 50% down payment. Then they break even.
Then your cash on cash return is pretty damn low too.
Yeah, it's like you can say, I mean, it'd be like 1% if you want to have some more, but that's ridiculous. I might as well just leave it in the stock market, and it would be much better. Yeah, so we looked at single family rental and said, well, we can't do it in the Bay Area, so we can do it in California, also because it's rent control and all that kind of stuff.
Yeah.
So we looked out of state, and so that's when I looked at the Census Bureau of Labor Statistics. I had a massive spreadsheet where I analyzed all the different markets and basically came up with Memphis, Cleveland, St. Louis, and Detroit as the top markets for us for the metrics that we're looking at, where I thought we would be able to find some pockets in there of cash flowing single family rentals. And then we started calling realtors in Memphis. My son actually flew to Memphis, met some realtors in Memphis, St. Louis, and Cleveland. And we found some realtors there. And then we worked with them very closely, telling them what our strategy was and identify neighborhoods where we can find these properties that would cash flow. The first property we bought, go ahead.
No. So basically you figured out, it's kind of back to the drawing board of what is the strategy in general. You realize that, okay, I identify that I want to make my money work for me and I want to get more passive income rentals. It's got to be in a different market, where one of these three markets where it's more affordable, lower price point to get in, so higher cash on cash return. And then you guys decided to start actually building all the relationships in this area, right? So you know the strategy, you know the location, you're building, and you've done the due diligence on the location, you're building the relationships. I want to talk a little bit more about the relationships, but first off, to identifying these locations, do you have any tips or tricks for the listeners on really identifying those locations? There's so many spots nationwide. Obviously, you mentioned not to go into the high metropolitan markets and so forth, stay away from the coast to a certain degree, but like, what would you recommend for people figuring out that location?
Yeah. So for me, we were looking for, single family rentals or rental properties in general. So I wanted to be somewhere that was landlord friendly.
Yes.
I lived in California. I knew what these tenants could do, how hard they were to evict. So
really easy for that one. You basically need a red state versus a blue state.
Exactly. Yeah, pretty much. Yeah. And then so not that I want to do anything bad with the tenants, but I want to be able that if they don't pay, I'm going to rely on that passive income. I want to be able to evict them relatively quickly. So in these markets like Memphis and Cleveland, 1 to 2 months, and then the tenant is out. So that's kind of what I was looking for. If you look at California, it could be 5, 6, more even sometimes.
On the minimum. Yeah. And if they're savvy, they could really push it even longer, which is outrageous. Can you imagine somebody living in your property for half a year to a full year plus, not paying you any rent and damaging your expensive property as it is? Like the returns, it's, oh my God, I can't imagine.
Lawyers fees, and you have to pay all the expenses. You have to pay your mortgage still and all that. And mortgage is expensive.
And the lawyers out here are expensive too, versus my lawyers over in Ohio are much more affordable. Thank God. Yeah.
Oh yeah. So that was the number one criteria for me. It was the landlord friendly state. Then after that, it was kind of looking at the economics of it. Kind of like how is the economy good for that? Like, is it growing? But I didn't want to get something that was growing very rapidly, because if the population is growing rapidly, that means the inventory is going to be too small at one point, and then it's going to drive the price up. So I want some boring town, boring city that's growing at 1%, 0.5%. It's kind of in that range.
Boring.
Low unemployment and everything.
Yeah, I like that. I've never actually heard that often. So looking for not too much growth, but you're looking for job growth, population growth, something unique about the area, but a little bit not like too explosive.
Sustainable. Sustainable. It takes time to build a house and all that kind of stuff. So if your population is growing at 10%, I mean, you can't build the houses fast enough. So what do people do? They're going to bid up the price, and they're going to be, it's going to be insane. So, and I don't want that. I don't want a bubble. I want to have something that's sustainable. I'm thinking long-term and all that. So that's number one. And then we're looking at basically affordability. So kind of what is the median household income? What is the median house price, house value? Then I calculated kind of like how far would it be from the 1% rule? I basically calculated the 1% rule from this at the city level to determine how close we were.
Do you mind sharing, just for listeners who don't know, like what the 1% rule is?
So the 1% rule is the gross rent, the annual gross rent divided by the value of the property. So if that is around 1%, this is just a rule of thumb, but if it is around 1%, the likelihood of it cash flowing is very high. So my range was really between like 0.75, 0.8 to 1.2. So if it was around that range, then this meant that I could look deeper in that city. There was probably a high chance for me to find properties that could cash flow.
So it's a good rule of thumb for the 1% rule to kind of on a piece of paper, a napkin type of strategy. And if it pencils out there, then it indicates, hey, maybe I can look a little bit deeper into this.
Yeah, exactly. And I was doing that when I bought that 8-unit apartment building, and I had to analyze like 500 properties on paper. That's exactly what I did. Is just, okay, no.
Yeah. So. And you have to. You got to get that rule of thumb, a filter, if you will, up front, so that you can actually, because it is a numbers game to a certain degree. You're gonna have to scan a lot of these properties before you actually find a couple, through that filter to see what makes sense. Question: do you have any resources, websites that you recommend for identifying some of the population growth, job growth?
So actually, I basically created a website called Investor-List. So I haven't updated the data for a while now, probably for 4 years. But I basically downloaded a lot of the data from the Census Bureau, from the Bureau of Labor Statistics, from City Data. City Data is another good source there where you can find information. I brought all of that into my database and did all the calculation. And I published all that data and create an application on top of that at investor-list.com.
So just for clarification, though, it's 4 years.
Yeah, it's a little bit. Yeah, the data is a little bit dated with that, but I think it's still a good indication for kind of like which market you want to look at, and then dig a little bit deeper after that to confirm that the data is still correct. After that, with the BLS and Census Bureau.
Do you still use that to this day for any deals the last 4 years you've been doing, or have you been actively going after properties?
Yeah. So I don't use that particular database, but we have identified like a list, like probably like 30 or 40 markets that we're interested in. And then we roll in new markets on a regular basis. So that's kind of what we do. Then we verify the data. So I don't update the data regularly. I'm planning to do that as part of Flip System. So that's going to be rolling into flip system in the next year or so.
Cool. Okay. All right. So now that you're figuring out the location, you're really identifying all the criteria that you're like, yes, this is awesome. You're building the relationship. What other tips and tricks do you have? I know your son flew out there and made the connections, shaking hands and so forth. I did exactly the same when I first started, but I built a lot of those relationships prior over the phone.
Oh, yeah, for sure.
And then once I had the contact list together and really warmed everything up, then I planned it properly. I'm sure you guys did the same thing.
Oh, exactly.
Who do you recommend building relationships with and kind of pounding the pavement to make those relationships?
Yeah, once you have the city, the number one is find the city. So once you have the city, then you kind of like, you connect first to the realtors. That's probably the best person to connect with. And then you can go for property managers. Often the realtor has already connection with property management companies, contractors, and that's the person you want to connect with. You want to have a realtor that knows how to work with investors, knows how to recognize the kind of opportunity, and is also aligned with our goal. So you don't want to work with a realtor that does like a commercial real estate broker when you're trying to do single family rentals. They're not going to work with you. You know, you don't want to work with someone that does retail because they don't know how to analyze a deal. They've never dealt with a tenant and, you know, there's all that kind of stuff. So you want someone that knows that is in line with what you're looking for. Luckily, there are very few of them. So.
Yeah. You know what I would say on top of that, though? This is why I think it's so crucial to know, first off, exactly laser beam focused on what you are going after. A lot of people I run into in this portion of kind of going after deals, they aren't as clear. They're like, yeah, I want some cash flow. No, I understand that. We all do, right? We want the tax benefits, cash flow, you know, but do you want a 3-bedroom? Are you looking for a 4-plex? Are you looking for a duplex? Or are you okay with this square footage? Is this too big? The type of project that entails on the renovation? Are you okay with foundation issues? Like all these things to be laser beam focused and knowing the neighborhoods. When I was building the relationships, I spoke to the police chief to figure out what neighborhoods to stay away from, which ones are kind of upcoming. I spoke with the Chamber of Commerce. I talked to a librarian. I talked to lenders, brokers. I talked to the people at the local RIA groups and asked for wholesalers and even the local housing for the university close by. So once you get all these contacts, it's very important to let them know like what you're looking for crystal clear, because then they're all going to start sending you those opportunities or connecting you with somebody that knows.
Exactly.
And it really benefits you to be laser beam focused versus saying, yeah, I'm just open, you know, for anything that you got. That's not good.
No, yeah. Then they kind of, they know that, well, I don't know, he doesn't really know what he's looking for. I'll just wait.
They don't know. Yeah, they don't know how to serve you if you can't give them one thing to send to you.
Yeah, I totally agree with that. And the thing is that people in real estate, they don't mind helping. I mean, it's not really, doesn't feel like a competitive space. Everybody's working with one another in different things. Sometimes, you know, because you never know, you may end up working with someone on a joint venture somewhere else. Someone is lending money to you on another project. And then you see an apartment building and then you say, I need like, you know, like my saying is that it doesn't matter how much money you have, you're always short a couple of millions.
Yeah.
So, you know, so it's nice to have friends that say, okay, yeah, I have 200, I have 300, and then you can raise money. So always maintain a good connection, a good network.
I love that. I think there is a lot of abundance mind thinking out there too, especially when you're just getting started. Don't feel embarrassed or like if that you're going to mess up. You really just got to put in the reps. I think people almost felt bad for me to a certain degree because I was just so like young, naive, didn't know what the hell I was doing, but I was so eager and constantly moving forward, failing forward, that people felt almost obligated to do whatever they could to connect me with somebody or to help out. And I think a lot of people could pull that card if they're just persistent and asking.
Yeah, exactly. And if you don't know, just say you don't know. I said, I'm looking to build passive income. I'm looking at doing this. I'm looking at doing syndication. I'm looking at doing this or single family rental or buying turnkey and stuff like that. Can you help me? Like, how do I decide which one? Talk to people, talk to multiple people about what they recommend, like leverage their experience to decide what you should do next. And then once you're laser focused, then you can go and really talk to the realtor, look at the markets and et cetera, and then make it happen.
I love it. Okay, Eric. So once you build all the relationships, you figured out the strategy, you figured out the location, you built the relationships. Now you got a bunch of leads coming in. What's the next steps for you guys? And then, what does that look like?
Yeah, so the next step for us, the first house we bought was, we just bought it cash. It was like $40,000 or $43,000, I think. And
Nice.
so it was like, okay, let's do that. You live in California and say, wow, this is less than a down payment on a house. So
Yeah, score. Yeah.
yeah, and say, well, I'm just going to lose $50,000, no big deal. But so anyway, so that's kind of what we did. Most people that don't have that kind of money, there are a lot of hard money lenders out there. So the people that are part of Flip System and stuff, we connect them with lenders as well that really lend in those markets and also lend in the type of properties that we're doing. So a lot of these lenders would actually cover like 80 to 90% of the purchase price and 100% of the rehab. So you would only...
Do you find lenders that will still actually lend on it? Are those private money lenders, I guess, versus the traditional? Okay. Hard money rates, but are they individuals or actually corporations? That okay.
Yeah, they're either private equity or corporations. Yeah.
Okay.
So they're basically pooling money from other investors and then financing the deals.
That makes sense, because I have seen a lot of certain requirements, I guess, that price point, right? If it's under 100,000 or under 150,000, they're like, it's not worth our time. So
so there's a list like this, or actually,
yeah,
focus on the camera. There's a list like this of hard money lenders, and then when you look at the people that are going to do in our market is over here, and then the people that are going to do this. So we have like 9 lenders that would lend in our market, in the price point that we're doing for these kinds of renovations.
You know what's so cool though? Because my first properties, my very first one was $9,000, and then my second one 2 months later it was $60,500, and I put a bunch of money into both of them. But I use credit cards. I use business credit at 0% interest for 18 months. It was hidden on the business side. Yeah. And so I was able to do the renovations. I actually purchased the properties with the credit cards, did the renovations, and then I refinanced it for long-term financing and had no money into it, cash flowed like crazy. So it's pretty eye-opening what you can do when you get creative and when you're working with those lower price points.
Yeah, absolutely. And I think also to make sure that, like you said, like you have an 18 months, that's enough time for you to kind of like refinance in the back end. I don't want people to be taking credit card debt at 6 months and then they have to pay like 30% interest in 6 months later when, But 18 months, I think it's definitely sufficient.
Yeah, make sure you're not using regular credit cards that are 20, 30% interest rates or showing on your personal. Or, even if the intro low interest rate isn't low enough or long enough,
My favorite, once you build a little bit of a track record, my favorite is definitely private money lending. So private individuals that are lending money, you meet them at meetups or your friends, family. You have a rich uncle, they may be lending you money for your projects, even if you don't have a track record. So these are all possibilities, and it's going to be cheaper than a hard money lender.
It does feel good paying back grandma or other people as well, versus big, Bank of America or something like that.
Yeah.
Yep.
So Bank of America, I never got money from Bank of America. You can't get a loan from those people ever. So I was never able to do that.
Yeah.
But maybe it depends on the market that I was in. But so the hard money lender, I never did a hard money lender either. I basically raised money from private money from people that I knew, people from work, people that I had networked with. We went to all kinds of real estate conferences and all that, and we talked to a ton of people. We would go actually to these conferences and stuff, and I would invite people. Sometimes they have that application, and then you can connect with people that are at the conference. And I would say, hey, I reserved a table for 12 people at this restaurant. If you want to meet me and talk about real estate and stuff like that, and then come and join me. Let me know, and I can add you to the reservation and stuff like that. So I met a ton of people that way. Sometimes it was lunch, sometimes it was coffee or something like that. So that's a great way to network, find people.
That's good.
And so
Eric, how long have you been doing real estate? And then, from your first private money lender, how long has it been? I'm sure you've worked with many, many private money lenders at this point. How long has that been?
Well, if you include the apartment building that I bought when I was 18 years old, so that would be
Just a
40
couple years. Okay. Yeah, just a couple years. Okay.
But
then,
in the where we were really starting to do the single family rental, that was like 10 years.
10 years. Okay.
Yeah, and in at the beginning, we were really focused on the family, building a passive income for the family.
Yeah.
And then as we were building that passive income, a lot of our friends and family came to us and said, hey, what are you guys doing? And then when I told them that I was investing in single family rentals in Memphis, then they just thought I was crazy. I told them that I bought this house, like $43,000 and all of that. And I said, what? A house?
Now they really think you're crazy once you tell them those numbers. Yeah.
They said the shed in my backyard was 60.
Yeah.
So I don't know what you're doing.
Yeah.
People are living in that. What kind of people are living in that? How much rent are they paying? So they have like all these crazy ideas.
Yeah.
So it was as if I was building mud huts in Africa and renting them. So it didn't really up later on though. They kind of like caught on and they said, well, there's something to it. Like they wanted to buy property, the finished product. They said, well, do you sell these properties at the end? And that's when we started, and that's when we launched Martel Turnkey. And with Martel Turnkey, we did over 650 single-family rental flips, $85 million in transactions, and so that's done very well.
I love that, Eric. So when it comes down to, you guys have raised millions of dollars and helped out a lot of people for real estate, and you prefer utilizing private money lending when deals don't go well, or losing sleep because grandma's money. What does that look like? Are you losing sleep? Like what does that process look like when deals don't go as planned?
Yeah, so I've always kept like a little bit of a buffer on all these properties. So I really, out of 650 properties, we probably lost money on like 1% of them. So it was really not that much. At one point, we had a team of about like 20 people managing the projects and, vetting all the inspection report and then the repairs and all that kind of stuff. So it was pretty good. We were also selling direct. So we had like Martel Turnkey website. We were doing a lot of advertising to sell these properties. So we had like also a list of like 14,000 investors that were looking for properties, that were interested in building a passive income portfolio. So things would sell pretty quickly. So we rarely lost money on the deals. There was some situations though where we felt that things were getting a little risky. And just giving you an example of that is the pandemic. So that when the pandemic hit, we had no clue how long, if we were able to sell any properties. There was a couple of months where we sold 0 properties because of the pandemic. People everybody thought it was the end of the world. Yeah. So it's just like everything stopped. Then after that, they realized, okay, there's going to be a period of adjustment and stuff like that. So it slowly came back in. So at that point, what we did, we converted a lot of these private money lenders into joint ventures.
Yep. So
because we didn't know how long it would last, we didn't want to be on the hook to pay interest payment every month. So we said, okay, well, let's do a joint venture instead, and we'll split the profit with you at the end. Maybe it's going to be 4 months, maybe it's going to be 6 months, maybe it's going to be 9 months, and then we'll figure it out and then we'll split the profit. So that's how we mitigated the risk from that perspective. Obviously, we do the regular project.
Sure.
6 months, the regular 6 months project that we were doing, we knew exactly how much the interest would be. So we didn't have any problems doing PML. But when it goes 9 months or 10 months or whatever, then we don't know. So the JV is more expensive on the regular project because we're splitting the profit 50-50. Then the other thing too that we did when the interest rate started to go up, was that 2021, 2022? I forget now.
21, yeah.
Yeah, 21. So then we started looking at, okay, what is going to be the interest rate 6 months from now? So everything that we bought, we always bought with the end in sight. We knew that we would sell this property at this value, and then the buyer would have to pay this much interest. So we would assume that if the interest is 4% now, we would assume that the buyer would have to pay 6 or 7% interest when they bought the property. And we wanted to make sure that the property still cash flowed at that time. So then we would kind of like back it out after that and say, this is how much we need to pay for the property. And so lots of calculation, and we were able to do this because we had a system. We had our own platform, our own CRM that was tracking all the properties, tracking all that stuff. And
when you're doing 650 deals, you got to stay organized.
Exactly.
So that is part of it.
And this software that we use. So we basically use everything that we've learned, all the processes that we've learned, and now we're incorporating that into the software platform that's called Flip System. So we're bringing that all in for all our clients.
I love that. And so at the end of the day, raising millions, helping out a lot of people, doing 650 plus deals, less than a dozen properties that, about half of that haven't gone well, but always having backup plans, especially making your investors right all the time is very crucial. It's very important, and kind of trying your best to plan for like what the next steps are, right? Nobody's got the crystal ball, but it's very crucial. But I think that the moral of it is that, guys, if you're raising money as a real estate investor, it's very important to utilize OPM so that you could grow, scale, and it does feel good helping out grandma or other people. Just make sure that you are being very, very responsible and treating it with a lot of purpose, because it's very crucial. A lot of these people, that's their everything, right? So you don't want to lose that. You don't want to be gambling with it. That is one reason.
I want to add also that you want to have a system. Once you start raising money and you're doing well and stuff like that, the word gets out. And then people start throwing money at you. You want to have a system. So our CRM was actually tracking that if someone gave us, like we said, this is this project for this property, like in St. Charles, St. Louis, I'm looking at one now. So this one, we're looking for $100,000 PML for that one. Then that money, that the investment record would create a promissory note, and that promissory note and investment would be assigned to this particular property. We wouldn't assign multiple investors on the property. We wouldn't, no funny business, because this is very serious, because this is how a lot of people get in trouble, is that they have a lot of money that come in, and then they don't know where the money is. They sell the property, and then they don't return the money back. They have a ton of interest payment. They don't know anything. And that could turn quite easily into, you end up in a Ponzi scheme without knowing it.
Oh, well,
Now you have money coming in. And you have money coming, you sell the property, and now you have to raise money to pay the interest on the other people. This is the definition of Ponzi.
For sure.
So you don't want to have that. So we always had like very closely tracked record of, where the money was, which property it was assigned to, and we just kept it that way. So
if you record the debt against the property too, that will definitely help stay organized and give the lenders the protection that they deserve and need, which I love. It is another reason why I definitely 1000% always recommend and love leveraging credit, because when you do it properly and learn how the banks and lenders are judging, like you can actually get a boatload of money from Bank of America or Chase or Wells Fargo, but getting at the affordable rates of 0% for 6 to 22 months where you can
actually show me how to do that.
Yeah. So
I was never able to get anything out of Bank of America.
Most people, they're just not teaching it in school, so it's not our fault. But when you learn the proper way,
what do they teach in school? That's what I'm wondering.
Yeah, they should have classes on real estate and so much more. Yeah, but when you actually learn this properly, then you can, the properties in other states like this under 100K, it really makes it much more affordable, and you can sleep like a baby knowing that you're not gambling with grandma's money at first, and you can actually feel good getting them strong returns when you really have the systems in place.
Yeah.
So Eric, when it comes down to the next steps, like you guys are offering on the leads that are coming in, you're running the 1%.
Like I mentioned, like we really calculate everything. We calculate everything from the exit strategy. We make sure that we have a buffer. We make sure that we have a good return. And then we work backwards in terms of the repairs, how much we can afford. The nice thing about when you're doing these single family rentals is that it's not emotional. So you are working with another investor, and he sees cash flow or no cash flow or whatever, or something else he wants to do. And I'll sell it for that price. That's fine. So I can do and move on to do something else. So It's
Well,
not like you're.
it's crucial. You shouldn't be emotional to it. I remember one of my first deals, I was getting emotional, like I'm gonna build all these things, make an extra bathroom, and the neighborhood didn't call for it.
Yeah.
And so it's important to look at it with a business mindset. And if you can get rid of it, make some kind of profit, even if it wasn't what you expected, but you can move on to the next one. Just like you're saying, that is a great mindset to have, and focus on a business, not getting emotional into it.
Yeah, exactly. And I think that's one of the things that helped me too, is to invest remotely.
Yes.
Because when I go and visit these markets and I visit the house, I'm kind of like, oh, what have we done? But when I look at it in the system, it's just like, okay, well, this is gonna make like $15,000. Okay,
numbers don't lie.
Yeah. So it's just a number. It's just an investment, like stock market or whatever, or something that you're building value on. I couldn't agree more. I love that. It's important to look at the numbers and really focus on it. And so you guys have been helping out a lot of people over the years do exactly the same thing. Can you tell us more about what that looks like? And is it just it's you and your son, or what's your son's name? It's really a family business. So my wife does that. My two sons are in the business.
What's your one son's name? Is it Antoine?
Antoine, yeah.
I know Antoine. That's funny. I haven't talked to him in a long time, but yeah, that's awesome.
Yeah, so Antoine and I are hand in hand in this. Etienne is part of Flip System as well. He helps. He's an advisor, senior advisor, helping clients decide to join Flip System.
Yeah.
My wife runs Martel Turnkey.
Cool.
And I talk on the phone with Brandon.
Yeah. Yeah, you get the laid back job, and rightfully so. That's good. You worked your butt off to get here. So, and I love how you're doing it with family. That's, it's a big core value for us. I think it's important to show your kids, show the whole family, and do it together, something that you guys love, but also the impact that you're making. So
that was very important for us too. When we talk about family, if you have kids and stuff, when we started going to these real estate conferences and stuff like that, I would go with my sons.
Yep.
And then we would get aligned with learn the same language, same strategy, the same, and then everybody was aligned and say, okay, well, we look at that. We looked at deals together.
Yeah.
We would talk about the deals, and then that's how you get aligned. And this is one of the nice thing about Flip System. If you bring your family into this, it's going to be the same thing. Everybody's going to be taking the training. Everybody's going to be aligned and focus on the same goal. And this is something that is very valuable. As you know, like real estate, there's so many different ways to make money in real estate. People get lost all the time. We talk to tons of investors that, I tried this Airbnb and I tried this and I tried self-storage and then I did wholesaling and and I lost money on that. And because you're not focused. You're not sharpening the saw in any particular strategy. You can make money in any of them. Just focus.
Yes. I always say there's 30 plus ways to make money in real estate. If you look on Bigger Pockets, they'll tell you there's 100 plus. At the end of the day, you got to stay focused. You got to pick one. And one of the things that you just mentioned is when I first got started, I realized the lingo, it's so important to talk the talk. And there's so many acronyms within real estate. It's outrageous.
Yeah.
So it's important to get that lingo down so that you can talk the talk and actually confidently have that conversation with lenders, wholesalers, certain people, which is great. But I love that. Eric, how can people get a hold of you and where are you guys going in the future? I'm excited to see the growth and see what you guys are up to.
Right now, Flip System. Flip System is what we're doing. We started basically with our investors at Martel Turnkey. They were asking us questions. They wanted to know, how can I do what you guys are doing? How can I buy a distressed property, renovate them, rent them out, refinancing in the back end, or sell them on Martel Turnkey or something like that? And we had done online training, mentorship. And really, we didn't have that much success, or our clients didn't have that much success in that. And we didn't like that. We don't like taking money from people that don't have success.
Yep.
So we flipped this around and said, what else do these people need in order to be successful? And that's when Flip System was launched. So now we have not only the online training and the coach and the coaching, we have subject matter experts, some people that can help you on the acquisition side. We have an acquisitions team. We have someone that's responsible, the one that was responsible for all the construction, the 650 properties at Martel Turnkey. So he's a coach on Flip System. And you can, when you do a deal with Flip System, you can go and ask him and say, hey, I've received this inspection report. What should I do? I've received this rehab bid. What do you think? I mean, this is an incredible resource to have. And that when you join Flip System, now this is part of your team, your extended team.
Yeah.
Make sure that you stay on track with what your goals are. So we have that online training, coaching, all kinds of different coaches that are in there. We have a lot of webinars. Every day we have like webinars, group coaching. You'll also have the one-on-one coaching. And then we have obviously we connect you with the team on the ground. This is the thing that is very complicated to do, and it's very time consuming. So now you get to work with some of the teams that we've worked with for the last 10 years, and the realtor, property manager, contractor in the markets that we've been investing for the last 10 years. So we're recommending Cleveland, St. Louis, Detroit, and other markets like Cincinnati, Dayton, all that. These are markets that we know very well, that we've invested over the last 10 years. So you don't have to go and look for a market. We know where the markets are. We know where the neighborhoods are.
You don't need to reinvent the wheel because you've already put in all the time, energy, efforts to build the system, to have the connections, to give them, handhold them through the process, which is great. I love that. How many people are actually, how many people are working within the company for...
Currently I have 25 people as part of the team right now. And then we have over 600 clients, active clients right now. And all of this is tied with our software platform. Remember how important it was for us to track all the projects and all the information. So that software platform is critical for the success of our clients, where you can analyze it. We have a property marketplace that's connected with MLS. And our acquisitions team is actually looking at all the deals. Every 2 hours, we get an update from MLS. They analyze the deal and see if it fits the buy box for our investors. And it gets put to the property marketplace. And our clients can go and check them out, add them to their analysis tool that's still within the same platform, add their financing, blah, 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 decide to buy. They can connect to their team on the ground through the platform. So they say, hey, John, what do you think of this property? We have a partner portal in the back end, so our partners can actually connect, comment on the property. They see everything that you're seeing. Yeah. They can comment on that. We're connecting you with the insurance company, the lenders, everything you need to be successful. And
Eric,
sell the property on Martel.kit. Yeah.
I love that. How can people get a hold of you or overall?
I forgot about that. Oh, yeah. You can, I'm on social media, Eric Martel Official, everywhere. You can also check out our flipsystem.com, our website, and you can connect there. So offer at flipsystem.com is also another one. You can also connect with me, Eric at flipsystem.com, if you ever get lost. But so I'm on all social media platform, YouTube channel as well, all Eric Martel Official.
I love it. Well, I appreciate your time today. It was incredible. I'm excited to hear what the listeners have to say as well. Guys, reach out to Eric if you do have any questions. But just a wealth of knowledge. If you guys want to get a hold of me, you can always do so on Instagram. It's Brandon Elliott Investments. Otherwise, check out our business page on Instagram. It's Credit Counsel Elite. If you have not already, hit that subscribe button to Ready, Set, Go Real Estate Investing Podcast. What are you waiting for? Do that right here, right now. So you get the newest notification every Monday. Leave that 5-star review after listening to a few episodes to give us the feedback. Greatly appreciate all the love and support you guys have been giving lately. Keep it coming. Appreciate it so much. Share this out, tag somebody that needs to see it. And if you want to hear more about what the heck we got going on at Credit Counsel Elite and how we can actually show you how to get up to $500,000 in the next 30 to 90 days at interest rates as low as 0%. It's incredible. Then check out creditcounselelite.com. That's creditcounselelite.com. There's a quick 10-minute video, explains more. Afterwards, you can jump on a call with me or somebody on our team to go over your particular situation where you're trying to go. And can't wait for next episode. We'll see you guys next week. God bless. Thanks, Eric. Appreciate you.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.